Hello, everyone, and welcome to Strategic Markets. In this week's market session, we're going to be discussing how everyone's celebrating inflation cooling, but the real risk this week wasn't CPI. It was actually the credibility, where the markets are ready to move or not. Now, I know that's every week, but we're also going to be looking at, crypto price action, what it's telling us, and whether markets are actually buying the soft landing story or just front running the liquidity. Here's a disclaimer. All right. So, in terms of the emotions, I know there's a lot of curiosity and caution going through our head. But hey, let us get into some aspects as to news events and fundamentals that's actually going to be moving the markets. And then we have Stephen over here who's going to be taking us through the technicals. Okay. So over here we have the Fed Watch website. And the Fed Watch tells us when the next FOMC meeting is, and it also just gives us a bit of a predictability of the reserve rates upcoming. We can see over here that the rates are expected to stay at about 3.5 to 3.75 with about a 95% probability. So does that mean that we'd be easing or we'll be having extra liquidity? It's up in the air right now. Obviously, there's other news events that's going to be, giving us that aspect, whether we're going to go a bit more into liquidity, have a little bit more risk on events. But for now, the market seems to think that we're not going to have any change upcoming at the 28th of Jan meeting. From there onwards, we also have some really interesting news that came out this week regarding inflation. So the CPI numbers did print at about 2.7% year on year, and the core as well being at about 2.6 year on year. We have some liquidity aspects as well, where the central bank did print relevant to some reverse repos, and talks of whether quantitative easing has come on or not is definitely something that's been going around within the community, but we'll just be assessing that over the coming weeks. And lastly, with our relevance to our growth in pricing and how we're going in terms of the macro, we can see over here that in the NASDAQ that came into our daily, that the week started off very well over here and then slowly went downwards. So we're still lagging just 1.5% below the all-time highs. So a couple of news events that we can discuss about. So first of all, CPI coming in at about 2.7%. That was really good. That's exactly what the markets were expecting. We did have a move up at the start of the week because of that. But then some more interesting things relevant to the crypto market structure bill, I definitely think had a bit of an impact in the market. Look, we were all waiting for a defined legislation, but then Coinbase came in and they had some worries regarding whether the bill was actually going to be beneficial for the American people. So that's being delayed yet again. It's had some move. We've definitely had some movements in the Russell 2000, which Steve's going to go into a bit with regards to risk on. But with that being said, that definitely was a bit of a hump for the crypto market structure bill. Some more important pieces of news that came out this week was Trump has called in for a 10% cap on credit card rates, which could be overall looked at from a good perspective, because that means people have less to pay on their bills moving in the future, creating some more liquidity for possible risk on assets. And then we also had some more political credibility issues with Fed Jerome Powell being investigated for the Fed renovations he's doing. So we're just going to have to wait that out and see. This could be beneficial if we have someone favoring more on Trump's side and doing his bidding, or whether we're just going to be moving on with some more political drama. But last of all, and I think something very interesting to see, is the earnings season. So the earnings season, we are coming up over the next couple of days, even weeks or so. But next week, we have Netflix, we have Intel, we have P&G. So a lot of big companies are going to have their earnings release. And if that's actually going to be beneficial and show us some positive upside, then, let's just see how we particularly go on that. But really interesting news that's been happening this week and next week. Now, very simply put, my biggest signal as to where the markets are going to head is Jim Cramer. And I am an anti-Cramer trader. That means if he says, I don't believe Bitcoin can reach 500K, let alone 1 billion, then we are going to 500K in months, guys. No, I'm kidding. I can't give that advice out, but as an anti-Cramer trader, I'm just, thinking that this could be actually pointing towards the upside. But if you're asking yourself why people are confused or even emotional right now, look, I get that the markets are trying to celebrate that softening inflation vibe while simultaneously pricing that political credibility risk regarding the Fed and whatnot. And we're also getting that, earnings season coming in. So just know that we might be setting ourselves for a bit of a strong run, but we just have to let things play out. But with that being said, I would love a technical insight from Steve.
Well, thank you very much for that, Yash. That's been absolutely fantastic. So, what we can actually do now is having a look at all of those different factors. There has just been so much that you've just discussed there, which has been absolutely brilliant to bring on just the nuts and bolts of what has been going on in relation to affecting the markets overall. But what impact has that actually had on the markets in the grand scheme of things? Because we've had all of these factors that you've been discussing there, and there's just been so much going on. But let's have a look now in terms of what the charts are now telling us, because every chart tells a story, and that is really the biggest crux of the matter. So when you have a look at what's been going on with the charts, you might take a look at all of this back over here, around October through to December, and you might go, oh my gosh, this is an absolute dog's breakfast. But when you take a look over the last month or so, very, very little has been going on. So everyone's talking about volatility, 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 when really, in all matter of fact, the amount of volatility in the markets directly right now is exceptionally low. So whenever you hear the media really ramping up the fact, oh, there's so much volatility in the markets, we've all got to really turn around and take a look and basically say, no, sorry. There is absolutely very, very little volatility going on in the markets right now because everyone's turning around, having a look at each other and saying, well, are we going to get decisions going on? Okay, we've got all these tariff questions going on right now, but no one's making a decision. We've got all these problems going on with Jerome Powell right now, but no one's making a decision, right? Everyone's still waiting for things to actually happen, but nothing's happening, right? So that's exactly what's going on. We've got a sandwich effect going on right now, and we're basically waiting for a breakout up or we're waiting for a breakout down. That's essentially what's going on. The charts are telling us a great story here. Essentially, we take a look at the SPY. The SPY is an ETF in relation to the largest companies in the United States. Essentially, this is an Ichimoku chart overall. We're taking a look at the Tenkan Sen. We're taking a look at the baseline beneath it. The baseline, essentially, that red line, acts in terms of a support level, if you want to look at it that way. On top of that as well, we have a lagging indicator. When the lagging indicator crosses over the baseline and the Tenkan Sen, that normally is an indication of upward movement. When it crosses below those, it normally indicates downward movement. That's essentially how you read the Ichimoku chart. On top of that as well, you have the clouds. It's trading above the cloud, normally a positive indication. Trading below the cloud, normally negative indication. That's a 30-second breakdown of what an Ichimoku chart is all about. Great charts overall to get an indication as to basically what circumstances are. Great charts to really learn more about overall. So the SPY looking pretty good at this point in time, but as you can see, we're getting basically really, really truncated kind of situation going on. When you take a look at the Qs, which is basically a tech-heavy sector, overall with that, we are trading not at all-time highs like the SPY was, though. We're basically about 1.5% beneath the all-time high from back over here in October. Okay, so it's something to keep in mind. We've still got the same kind of technical setup compared to where the SPY was. Well above the support levels at this point in time, above the cloud, doing pretty well in the overall scheme of things, but has not reached those all-time highs we were talking about. We compare it across the Bitcoin overall, though. We've got a really interesting formation going on here. Bitcoin is well off its highs. We all know that. There's no doubt about that whatsoever. But what Bitcoin has managed to do is bouncing off support levels from earlier in the year. Way back over here in March, okay, way back here over in March overall here, and way back over here from December of last year as well. So overall, what's basically happening is here we've got a base forming, and it looks like it's breaking out of that base. This here was that lagging indicator that I was talking about before. That's actually breaking out above that resistance area as well, which tends to indicate that we've got some positive momentum coming into it. And on top of that as well, it seems to be breaking out above this cloud area. Another potentially positive indication should it manage to break out above that as well there too. All quite nice, but be aware of potential resistance areas up above here. They were previous support levels from way back over here in June of last year. But will they act as support levels in the future is the next step to think about. Ethereum, a bit more of a dog's breakfast, okay? Sorry about all the lines here, but I've left them in on purpose, okay? So
Yeah.
there's a method in my madness and a madness in my method, okay? But when it comes to technical analysis, sometimes the old lines can be really handy to keep in mind. But look at the dates on these. These are support
Mm.
and resistance lines from back in 2021 and 2022. And they were tested,
Suspecting.
yeah, and they were tested back in December and earlier this year as well, right? But they held. That's the important thing to keep in mind. They held. But so did some of these resistance areas from way back when as well, right?
Yeah.
So this is where we've got to keep in mind there's a lot of supply zones as well as support zones that are being kept in mind. Charts have memories, and these are the kind of things that we need to keep in mind. A lot of people might poo-poo technical analysis, but at the same time, these support and resistance zones do have validity, and they
And I
need.
might just say, yeah, you're 100% on track there. But, with regards to the red cloud in the BTC or the ETH zone, it's very interesting to see how BTC was just trying to break above the red cloud, but ETH has actually broken above it.
Mm,
Which, look, I just have a theory to say that, with the Russell breaking out recently on, on the low caps, taking a bit more risk, and ETH actually having a breakout on this cloud as well, and
mm.
BTC just getting there, we might be going on a bit of a risk on appetite, but that's just my little bias there. I'm interested for you to expand on that a little bit.
We could be. Now, interesting point you make about the red cloud. Okay. I'll tell
Mm,
you this much in terms of the studies in terms of these particular Ichimoku clouds as well. The color of the cloud is not significant. Okay. That doesn't matter. It's just the mere fact of the position of the cloud in relation to the actual price. That's all that really matters. The color of the cloud doesn't matter. Okay. So that's one thing to keep in mind. In relation to the breakout above and so on like that, let's have a look at Ethereum a little bit more in terms of another aspect that I'd like you to consider. Now,
yeah.
what I want to try and do is get rid of that there because I've got a little thing that's floating down on that on there. But what I want you to have a look at is the moving averages in relation to it.
Mm,
Now, what I want to do is I want to get rid of these DMIs and RSIs just for a tick as well, and I'll just expand on this in particular. You'll see that
mm,
overall, when it comes to Ethereum, it's just broken above the declining 100-day moving average, which is that white line. Okay,
mhm.
it's just broken above it. It's been testing it, it's been taunting with it, and so on like that in terms of Ethereum overall. Now you might think, hey, it's a great sign. Hey, it's just broken above it. That's awesome, right? Okay, let's put that in context when we take a look at Bitcoin. That's been struggling against it. Now,
Mm,
now that changes your perspective a little bit, doesn't it? All right.
mm,
This makes things really interesting. The one thing you really want to see is Bitcoin and Ethereum moving in unison in the same direction going up. That gives you more strength and more power, much the same way as you have the SPY, the NASDAQ, the Dow, and the Russell all moving up in unison. That gives you the Dow theory really complementing each other and going up in unison and going well. Brings me on to another point. The Russell this week, what did that do? Look at that. Beautiful breakout. That's the Russell. The Russell is the small cap index of 2,000 stocks. Did absolutely fantastic. What did the other indexes do? Sweet FA. Okay. That's the truth. Okay. The Dow,
yeah.
nothing. Top 30 stocks in the US. The NASDAQ, nothing. That's what happened this week. The SPY, what did that do? Nothing. Okay.
Mm,
Now, what does that say for Dow theory? Okay. These are the kind of things we've got to keep in mind. We want to see these kind of things breaking out and moving upwards, all in unison to give us some good authority and good strength. So when we're taking a look at all of these things, if you're a conservative person, you want to be seeing all of these things moving up in unison and getting them going. That's the kind of thing you want to have happening. The same with both Bitcoin, Ethereum, and all the altcoins. The same with stocks and equities in terms of all of the major indices. If you're more of an aggressive person, watch for a breakout when it comes to all of these indices and then act. The same with the cryptos. That'd be the way you'd want to go. As soon as you see a breakout of, say, the SPY, you'd want to act. As soon as you see a breakdown of the SPY, you'd want to act. You're going to get more in terms of the equity space if you're looking at the SPY. You're going to get more in terms of the tech if you're looking at the NASDAQ. That'd be the trick. In terms of long term, what do you want to do? If you're listening to the media, you need to switch that media and all those kind of aspects and that Kramer stuff off. Okay? That's what you want to get rid of. So that's the kind of thing you can get from and glean from in relation to all of this tech and all of this technical analysis. And that's the kind of thing we want to look at there. So I'll hand it back over to you, my friend.
This week wasn't just about one CPI print. It was actually where the markets trust the policy backdrop and the earnings reality. And it looks like we'll be having a lot more shape and news coming up throughout the week that's upcoming. So with that being said, this isn't financial advice. It's not what we do here, but it is how we think on the markets. So thanks for tuning in this week, and we hope that you will join us for the next video. Bye now.